Welcome to TheoTrade. This is Don Kaufman. October 16th, 2020. Doing the weekend update here on a Friday afternoon. What do the markets say about election and really some of the election risk? We're going to look at that here momentarily. But let's talk a little bit about the week that just passed. One of the things, of course, that a lot of traders are talking about is some fairly wild sell-side activity into the closing bell on this Friday afternoon. That might not look like much, but literally from high to where we closed out today, you got about a 50-point reversal inside of the S&Ps. But it's not the S&Ps that are of concern. In this particular case, it's none other than the Nasdaq seeing a fairly wicked 200-point reversal inside of intraday trade, most of which really kind of came into the bell and even into after hours as the futures continued to slide. Nevertheless, again, full-fledged 200-point reversal inside of trade today. We will take it, people. We caught quite a bit of that reversal on an intraday basis. So, as I was saying, the entire week, we're going to kind of recap here in a really brief synopsis and then be very forward-looking. Of course, we're also going to discuss, as I said, a little bit about what the markets are interpreting election and election risk to be, and I'll give you a little bit of insight to that here momentarily. So as I said, risk and sell-side activity into the bell. Where it came from? Is there a particular news story over here? For the most part, you had broken Brexit, and it didn't impact the markets. A couple things, again, I kind of wanted to point out here. Prior to the bell going off this morning, and of course, I'm on Eastern time here. Bell goes off at 9:30 Eastern Standard Time. We had like retail sales numbers, and retail sales numbers, they move the market kind of nominally. And again, we'll look at the retail sales here momentarily, but they did bid up the marketplace. But again, Brexit and the idea that the Brexit negotiations are over, absolutely nothing. It was good for less than about a 5-point move inside of the futures this morning. So next, the other aspect that I really wanted to bring up, and I was talking about this kind of extensively earlier in the trading week, is the pullback off of the upper expected move, which I'm going to detail here momentarily. But net on the week, whether you're aware of this or not, we finished massively unchanged on the entire week. To detail that, we're actually going to cruise over to the SPX, the mother of all products here, the SPX. And when I say that we kind of finished unchanged, every single week we, of course, detail the SPX, and we're going to do the same here momentarily. But you can see this is last Friday, and I'm kind of highlighting right now last Friday, and this is the central line. Of course, that's where we closed last Friday, and where did we close this Friday? Pretty much a handful of points higher. So for the most part on the week, massively unchanged. What did the rest of the major indices do? When I'm talking about major indices, I often look at like SPX, and of course I'll cruise over to like the Nasdaq, the QQQ, and apply auto expected moves to the QQQ. You take a look at the Nasdaq. The Nasdaq again ripped above the upper expected move and pulled back hard off of it. But again, net, the Nasdaq did in fact, I'll zoom back into this, the Nasdaq did in fact finish the week ever so slightly higher. Okay. But again, big pullback off of that, which I'll again detail here momentarily. And last but definitely not least, you got to look at the Russell. The Russell actually, from the get-go of the week, didn't participate in the rally, backs off fairly substantially on Thursday, rallies back up and finishes the week ever so slightly lower. Again, it's kind of been, week in and week out, I've been talking about like this little bit of a shell game, and for the most part, how there's been a kind of consistent rotation of capital, and that's why I kind of call it the shell game. Lately, it's been, we're either coming, into the financials, out of tech, into the financials. And with the financials, of course, you have IWM. With the financials and IWM, of course, you would have to incorporate the energy sector in there as well. And we've seen, again, fairly consistent rotations. Now, again, we mentioned that in quite some detail, of course, last week. Now, to not recap a little bit of last week, let's actually move onward and upward. As I was saying, so the week finished, for the most part, massively unchanged, and there was a pullback off the upper expected move. For those of you that kind of tuned in, night after night here on some of the nightly videos, I was talking about specifically on Tuesday that we were looking specifically for a pullback, right? So we're looking for this wild pullback off the upper edge of the expected move, but it wasn't so much about the SPX. The trade that I try to bring you into was primarily inside of the QQQ, because the Qs had not only defected through the upper edge of the expected move here, but on Tuesday, I mean, they were just demonstratively higher and above that edge of the expected move. We were looking for the pullback. We got a decent pullback on the week. And again, we traded for it and it worked out. All right. Pushing forward from there, the next aspect I wanted to bring up over here, and we're just going kind of rapid fire through some aspects of this before we actually get to talk about a little bit about election risk and, of course, some heavy earnings coming up. Retail sales numbers. So retail sales numbers, they came out this morning and they were excellent, right? Retail sales numbers are excellent. But at the exact same time, I kind of take that with a little bit of grain of salt. And I'm going to tell you exactly why. And then I'll actually show you Amazon and a couple of the other retailers. Listen. What did you expect to have happen with retail sales, right? Right now, where are you spending capital? Going out to a lot of restaurants? Probably not. A lot of movies? Absolutely not. You even spending money on gas? No. Nobody ever leaves their house lately. Obviously, some of us do leave from time to time. Nevertheless, the point that I'm trying to make with that is, okay, we should have expected much better, okay, retail sales. And that's exactly why, if you're surprised right now, okay, about Amazon. Amazon saw some pretty fierce sell-side activity, okay, and some very, very wild trade, even into the closing bell. Yes, there's a couple of like misticks in here. Nevertheless, okay, the actual move in Amazon, and this is the solid move from 33.40, okay, roughly down into the close of 32, we'll call it like 60. People, this was hideous sell-side activity, okay, coming into the closing bell. And that's one of the primary reasons that we saw that heavy sell side activity inside of the Nasdaq. Now, yeah, it wasn't just isolated. Amazon finished down by about 2%. It wasn't just isolated into Amazon. Of course, you had sell side activity in a handful of other techs, including, of course, Tesla, which impacts the Nasdaq. Apple down about percent and a half over here. But it was in very large part Amazon that damaged the Nasdaq in there. So is Amazon the only, retail stock that really took a hit? Well, actually, if you took a look at Walmart, Walmart also took a big hit into the cash close. We took a look at Costco and you're like, oh, Costco's up $5. Yeah, but Costco actually had an upgrade and still slid a little bit into the cash close. And then Target, of course, also saw some sell-side activity as the day kind of progressed. So I thought that was interesting because it took the marketplace some time to kind of delineate and, work through, hey, some of the retail sales. And those retail sales numbers came out pre-market. And of course, it was only into the cash close that we saw that sell-side activity really start to impact some of those retailers out there. All right, so we have heavy earnings that are due up and coming next week. It's Tesla, it's Netflix and Intel. Listen, I don't want to forget, people always get, upset. They're like, you forgot my favorite stock. Like what? IBM? Is IBM, does it need mentioning in here? What I'm actually mentioning over here are really, they're underlyings that I don't even necessarily think. Like Tesla, is it a market moving event? I think Tesla can impact the Nasdaq to a degree. Netflix, I would not call a market moving event. Netflix has tendency to trade a little bit autonomously. Intel, out of these three underlyings, I would say Intel actually carries quite a bit of weight because it's going to move some of the semiconductors out there. But when it comes to looking around and checking out earnings, come over here to the scan tab on thinkorswim. Kind of a cool way. People look at like earnings calendars and so forth. Listen, all I'm doing is I'm scanning, and I'm just going to highlight something for a moment. Whenever I like talk about, earnings, how does he know what stocks are coming out? I scan in weeklies. Those are underlyings that also have weekly options. That is, have an expiration pretty much every single week, right? So that kind of denotes that there's some degree of liquidity. It doesn't always mean that they're liquid. I look for earnings, has earnings anytime, and I'll just put out the next 5 days, right? So earnings anytime in the next 5 days. Kind of scroll through the list over here, and what do you got? Well, pretty much what I said. Again, you're going to have heavy earnings, but these are not going to be the big market moving events. As I said, IBM is not going to be a market moving event. Intel can move some of the semiconductors that can actually spill back over. Of course, the semis can spill over to the Nasdaq, and actually the semis are big enough to actually move the S&P. So there is one that definitely holds a little bit of weight. And you ask, why not Tesla? Again, Tesla can't spill over to the S&Ps because Tesla is not incorporated in the S&P 500. Not gonna work here anymore. But no, Tesla doesn't spill over into the S&Ps, but it can have influence over to the Nasdaq futures to some degree. The reason, though, that I'm actually bringing up some of the earnings is I fully expect to be trading some of those earnings with earnings-based butterflies and a couple of scalps that I do the day after the earnings announcements. So be on the lookout in the TheoTrade chat room from some of the earnings-based butterflies as we move through next week. All right, let's get to work here. And when I say let's get to work here, of course, this weekend's topic is, what do markets say about the election? I mean, what are markets actually saying about the election? And I want to give you not so much my take. I want to actually show you what the marketplace is interpreting that risk to be. And, you're like, yeah, but you're interpreting the marketplace. Yeah, but you know what? I'm actually going to show you a little history over here. I think you guys will find interesting. So I'm going to go ahead and I'm going to close up this left side bar. And one of the things we're going to focus on, okay, is right over here to the right-hand side of the screen. And what you're looking at is volatility and volatility skew. And volatility skew can tell you, okay, an entire story. Look at like 3 days out. That's Monday's expiration. There's a 14% implied volatility. That doesn't mean like it doesn't mean a whole lot, right? Look a little further out, right? So like later next week, which is here's the Friday expiration, October 23rd. All right, it's about 20% implied volatility. So what you're learning here is by looking at the skew, what does the week say? Monday, 14% vol, not too crazy. But by Friday, the volatility skew picks up to about 20%, which means there must be some news breaking, kind of like late in the week. All right, some big numbers that come out over there, and you can start to read into skew that way. And it's a great way to do it, because otherwise, you're stuck doing what? You go over here to a calendar, you like drop out to like next week. You're like, what's coming out next week? All right. And seriously, most people, this is the way they do it. They go, okay, there's PMI, numbers, of course, due out. That's not too crazy. We have, of course, the some of the jobless numbers that come out. And it goes on and on and on and on, right? Come in here, mortgage applications. There's nothing all that exciting next week. And rather than me read into the calendar, I read into the volatility skew, because actually, honestly, I trust the volatility skew more, because even if there were like some big numbers coming out, the volatility skew is actually delineating, okay, what the market anticipation of risk is going to be around those numbers. And you can see, again, as the week kind of goes on, some of the risk actually grows. So I'm going to take that logic and I'm going to apply that logic to the election risk. And when you start looking out a little bit in time here, and just kind of follow along, sit back and play the TheoTrade at home game. I'm just going to scroll out, as I said, just a little bit over here so you guys can get a full depth view. And all I'm going to do is just highlight some of the vol skew. And when I say I'm highlighting some of the vol skew, what I actually want to show you in this circumstance is, all right, here we are, but this is only 14 days out. No election there. Now, November 2nd, all right, no election there. And boom, coming into like November 4th, you'll see just a little bit of risk start to be on the table there as the volatility jumps to some 20, again, right here. See the risk actually jump up 26, 27, okay? Then it drops back down to about 27%. And again, what it's actually saying over here is, first and foremost, a lot of reading into this. Again, you're trying to interpret. What I'm saying in this case is, first and foremost, you would expect the volatility to be really big and then kind of maybe drop off a little bit back here, but it's not dropping off. And in fact, when you start looking out even to like the December expiration is actually carrying some of the highest implied volatility, which for argument's sake kind of says we may not know the results of the election until very far out in time. That's the only reason for them, like, propagating the volatility this high, this far out in time. But there's one really interesting thing that you can't see here. Okay. And that's this. These volatilities are actually lower than they were even a week ago. And that's what I picked up on. And that's actually why I wanted to mention this a little bit. There's some of my position in here. So we're going to cruise over to the Analyze tab, and I'm going to go to Think Back. And what Think Back can allow you to do, we're looking at the spiders. We're going to go back in time a little bit. So this is like yesterday, but let's go back in time. So today is, again, October 16th. Let's go back and drop back pretty much a week ago. What did risk for the election look like a week ago, right? And you're like, oh, it's actually kind of fairly similar. It's 26, 27%, nothing too crazy. And we're going to go back again a little bit prior to that. So we'll even go back, for instance, to like October 2nd. And again, what I'm trying to show you here, and you'll see this pretty clearly right now, what I'm trying to show you here is, were you aware? And there was more volatility in the overall marketplace, but one of the interesting things here is that volatility was quite a bit higher back in the November and December expirations, okay, 2 weeks ago, which actually doesn't make a whole lot of sense, because what you expect to have happen coming into the election, you expect the IV to go up, right? And you're like, oh, that's going to raise the price of options. It's really not. What's happening is implied volatility should be going up, and it'll go from like 30%, then it'll jump up to like, just a couple days later, like 31%. Before you know it, be sitting at like 35%. Then it'll jump all the way, a couple days before the election. It might even jump up to like 40%, right? So IV is going up. But the reasons IV is going up, implied volatility is not going up to raise the price of options. IV is going up, okay, to offset what we term theta decay. And this is actually what we call your theta. That's how an option basically burns. And everybody knows that theta decay looks something like this. So as theta burns, the IV is offsetting the theta. So you would expect just a very, very mild and constant increase of implied volatility. And the interesting irony is you're not getting it right now. You're not getting it. The risk around the election right now is actually abating to some degree. And again, that's one of the things you want to start to think about. Is that going to continue? I don't have the answer for that one just yet. Maybe the election risk really situation starts to come to a head, all of a sudden if the election's close. But right now, for argument's sake, what this marketplace is saying, and I'm not trying to get political in any way, shape, or form, but the marketplace is saying though right now, is that the election is actually a bit of a non-event. Because if it was an event, you would see that, again, IV comes up to offset theta, all right? And they are, when you start thinking about like theta and implied volatility, this is time decay and implied volatility, they offset one another, right? And I could go into like, all the wonderful mathematics behind this. But it comes down to, again, you would expect implied volatility to go up to offset some of the theta burn, and you're not seeing that right now. They're actually taking some of the risk out of the election, which means, again, the election, well, call it what you will. Right now, they seem to be pricing it as a bit of a non-event. And I think that the S&Ps are the most effective way to be able to gauge that. So with that, again, this is something to keep an eye on in the coming days and coming weeks, because, I look at this as opportunistic. I just do. I did a video literally last night and I was like, last call to buy volatility. The volatility right now seems to me to be low, kind of relative to what I think some of the risk is going to be. And that's why I wanted to be a net buyer. I'm actually going to be buying, some iron condors, looking for big moves outside of the expected. All right. But let's get back to the right here, right now. Right here, right now. People say, what do you expect in this marketplace? What do I expect in this marketplace? If you're a bit of a market technician, you may actually look at this and go, oh, there it is. The fateful double top. We're going to come off big over here. Possible, plausible. Okay. But I'm going to tell you what. Right here, right now, I think the most effective thing to do, back away from the screen and just read into the risk. Okay. Get a read on risk. what's risk actually saying? VVIX dollar bonds, okay? This is where I like to look for getting a read on risk. One of the first things I look at, the bonds this week, okay, finished higher, considerably higher. You know what? To determine considerably higher, I would have to go to the TLT and I'd have to apply auto expected moves, okay? And the answer to that question is found actually in the auto expected moves. This week, yeah, bonds actually did finish considerably higher. In fact, bonds at one point this week were actually outside their expected move to the upside. If you look at this as like risk on, risk off, this is a display, okay, of risk in the market, meaning that there's definitely some movement in the bond product to the upside. You could give me 50 reasons why, and there's definitely some reason, though, that the bond product is actually showing and displaying degrees of risk. So I start with bonds. We're going to work our way backwards. Then I cruise over to the dollar. How did the dollar actually finish the week? Higher. Considerably higher? Well, when you turn around and start a risk on, risk off, yeah, the dollar actually had also some fairly substantial movement to the upside over here. It's too early to tell if the dollar is going to continue to the upside. Now, with the dollar actually heading up, if the dollar does continue to head up, I believe that the dollar is very much like, okay, the new VIX. You'll notice when I'm getting a read on risk, I'm not even talking about the VIX right now. Whatever, who cares? And the volatility futures are great, but volatility futures are much more like intraday. But I think that if the dollar continues at all to the upside, like you got to look at this and say, the world right now is shoving capital into the dollar, and that would make me nervous. And last, but definitely not least on this list, I do look at the VVIX. That's the volatility of the volatility index. And you take a look at the week, and we did explode quite a bit. I mean, we actually hit the 120 level inside the VVIX, right? There are three major risk parameters that I look at, all of which are displaying degrees of risk. So at this point, I'm not sitting here proclaiming this next week is going to be a down week. I am telling you this though, okay? Getting a read on risk, the major factors that display degrees of risk are all actually pointing towards risk forthcoming to the marketplace. The final addition to that would be none other than the SPX, the mother of all products. So again, the SPX finished this past week just unchanged. Nothing. What are we expecting next week? About an $81 move. Why is that interesting? Well, they are adding a little bit of risk, but this week of trade, like the week we just passed through, Monday was actually Columbus Day, but interestingly enough, we moved huge on Monday. We didn't expect anything on Monday. We moved the entire edge of the expected move all on Monday, and we expected nothing for Monday. We're actually adding more risk. They're packing more risk into this next week. So if you're reading into this once again, and you should read into risk, they have actually raised up the implied volatility to some degree, only about like 9-10 points. But it's a noticeable increase of implied volatility of a week that, again, finished unchanged. Okay, look at it, people. All right, you have 4 different risk parameters that are all displaying degrees of risk. Hey, the election may say absolutely nothing right now. In fact, again, as I said, to recap there, the election actually says, if anything, that, risk is kind of abating. But it does kind of feel like right here, right now, we're about to, again, hit a patch of volatility. It's something I was talking about last weekend's video. And last weekend's video was like, listen, get ready because we're going to be a rockin'. And this week, we were doing just that. Again, Nasdaq all over the place. People, you still have to keep your helmet on, expect some volatility. That's what the marketplace is telling us right now, moving forward to this next week. Earnings, I don't really think are going to come into play other than maybe Intel, but prepare for a couple of earnings-based trades. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful weekend. Bye-bye.